and welcome to India Market Open. It's the last day of this week, so the first week of trade in the month of January 2024. It was a very, very smart pullback yesterday, Niraj and Tamanna. We started off well, beat the rest of the world, continued to do well, but I think the volatility will continue on the street, and I think being prudent, cautious is still the name of the game.
Very likely. I mean, the only thing that befuddled me yesterday completely from a trade perspective. By the way, India won the test match, so I must say that. But the only thing that befuddled me yesterday was
how I predicted it.
You didn't lay a bet on it, your loss. But the put-call ratio from 0.7 or lower than that, in one day jumped to 1.22. These weekly expiries are playing a bit of a havoc and kind of creating a bit of a confusion when it comes to data points, I must say.
Yeah. And what about the wicks? Anything on the wicks? I didn't see that. It
and lower.
Ease off. Huh?
Yeah.
Okay, so low wicks, I guess, is always good. But globally, Tamanna, we're still sulking, I believe.
Globally, we're still, I would say, uncertainty rather than sulking. Yeah. So it's all about the jobs data overnight and looking forward to the big data numbers which are coming in today. So a quick wrap on what's happening on the US market front. So mixed sort of cues coming in from Wall Street ahead of that key jobs data. The Nasdaq closing lower for the fifth straight session because of stocks like Apple, bad sort of brokerage reports or bad cues over there. So that's looking like a pain. So what has come in? Let's just take you through all of the data that has actually come in. Weekly jobless claims have fallen by 18,000 to 202,000. versus an estimate of 216,000. So jobless claims have fallen more than expected or less than expected. Private payrolls, meanwhile, have grown 164,000, so more than expected because the estimate was 133,000. Now, this is a private estimate by an agency called the ADP, but the government numbers will come out later tonight, India time, and that's the non-farm payroll data. The expectation is 170,000 increase in non-farm payrolls and an unemployment figure of 3.8. Long story short, what is the street looking out for with all of these data points? Are you seeing an increase in jobs but not in wages? And that's the key point of finding that Goldilocks zone, which will allow the Fed to start cutting rates faster. That's the big takeaway that the street is looking for. So that's what we'll have to see. Because of that uncertainty, you saw a fairly sharp move in the US 10-year, at least psychologically above the 4% mark ahead of this key jobs data. Crude is another interesting story which is developing because a confluence of factors over there. Your Red Sea crisis continues to put pressure on whether crude prices will go up, but that's not really happening because a lot of that demand, instead of carriers, for example, taking the long route to avoid the Red Sea, are increasing their offtake from US, whose crude supplies are pretty robust overall. The US crude inventory, as a result, and this is EIA, it's a weekly data set that comes out, fell about 1.26% to 431 million barrels. So you've seen crude softening as well. And I'll just add, before I hand it over to Niraj, that FIs were buyers yesterday in Indian markets. They bought about 1,500 odd crores, and domestic investors are the ones who sold close to 1,400 crores. So FIs are definitely, maybe that will pick up the rest of the month, and that's what we'll see.
Very likely as allocations pick up. I mean, usually people say, I mean, all the fund managers who come in, the PMS guys who manage global money say that 10th of January is the date from which they start getting these allocation messages. So let's wait and watch what happens there. But, I think Tamanna set it up very well. Uncertainty on the global front. From a Q's perspective, uncertainty on the local front as well, I must say. So yesterday, one thing that happened is that indices respected the 21,500 mark on the Nifty. Remember, we were saying yesterday that the maximum put OI was at 21,500. They also respected 47,500 on the Nifty Bank. 4 days on a trot, there was weakness, but around that mark is where the bounce back happened, and the Nifty Bank traded higher as well. If you just look at the put options chain now, you will see that the maximum OI shifted from 21,500 to 21,600. So the distribution on the put side is substantially higher at 21,600, and that zone, 500 to 600, now remains that big support zone for the markets, if you will. Technically, you could argue, I was looking at a couple of notes, that there's a short-term reversal. The positives are that there was market breadth, which was constructive, volatility, which came off as well, but put call ratio jumped from 0.7 to 1.22 in a single day. I mean, these are things that are not normally seen, but that's happening as well. And what brings caution? I mean, 11 stocks in F&O ban. You don't see such early in the series, so many stocks entering the F&O ban. This is usually something that happens in the last 10 days of trade. But 11 stocks in the F&O ban, this is usually the higher end of the range, if you will, right at the start of the series. Also, real estate had gone berserk yesterday. If you look at the trading delivery volumes on real estate stocks, it was a pittance. Though you could argue that with such high volumes, usually delivery percentages would come off. But even then, the delivery percentages were very, very low for the real estate stocks. So while the index went up and could well do today, I mean, it'll be the talking point on our editor's cut, on all the guests that we talked to because of the kind of move that the real estate index made yesterday. 6.76% is unheard of, really. So we'll focus on that. But what this also brings, guys, just before we get to stocks to watch and other things, is that something that Ganeshram Jayaraman of Avendus Spark was telling me yesterday, that unsold inventory in the top 15 metros is at the lowest. I think he mentioned some 10, 12 years or something. And he mentioned, and therefore his call was that real estate ancillaries could start doing well, because it's only when new construction picks up is when the ancillary demand comes in. Otherwise, inventory sell-off does not result to demand for plywood, pipes, etc. Obviously. So the belief is, and then I spoke to a couple of other people, the belief is that the next 12 months, while real estate stocks may do what they do, real estate ancillaries could see some serious demand because of new construction pickup. And that is a pocket to watch out for sure.
Pipes, paint, cement,
yes,
the whole aura.
All of that.
In fact, I should bring this up. We're going to be talking to Sumit today, and one of his few bets are in the APLs and the Hariom pipes of the world. But Niraj, you've talked about most sectors. Quick one on Bank Nifty. We've got to give that some credit to. It did pull back really well yesterday. 48,195 is where Bank Nifty closed out in trade. I think the big trigger now for Bank Nifty will be the business update that comes in from HDFC Bank. So I think that will be the next cue to help Bank Nifty move higher. On the VIX, which we talked about, while you said there was a big jump on the PCR, the VIX also didn't just fall by 1% or 2%. It was down nearly 5% to go out at 13 odd levels. So 13.3 is where the India VIX closed trade yesterday. So indicating the bulls may be having some more control on the street. Consolidation, remember, will continue. Niraj, I'm sure, will talk about power stocks with a change of CRC norms, but we'll leave that to him in a minute. But generally speaking, it'd be nice to know whether Bank Nifty will drive the index over the course of the next couple of days. For now, looking comfortable around 48,200 odd. GIFT Nifty indicating to a flat to lower start in trade. So it could be a morning where some profit may be taken off the table. We may consolidate or spend some more time consolidating before the markets resume the up move. One quick view on this, guys. Usually markets either go through a price correction or a time correction, and that is the nature of the markets that we live in. And this is what makes me wonder, is January going to be all about spending some time in a range, consolidating, or will we actually see a sharp fall before we go back up?
We were talking about this yesterday morning, Samina, but look at how the entire day panned out. So there is a lot which has become unpredictable. In terms of especially how Indian markets will react. There's a different story going on here and a different trajectory going on here.
So change is the only constant, no? Like this.
And a lot of it is stock specific, a lot of it fueled by business updates, and a ton of them this morning.
And we will take a look at all of those this morning. But before I go into business updates, Grasim is one counter you want to be watching out for in today's day of trade. There's enough and more. We've talked about fundraising from IPOs to QIPs. This one, of course, looking to raise 4 lakh crores via rights issue. The record date has been announced as 10th of January. The ratio is 6 shares for every 179 shares held. Price of this comes at a 12.7% discount to yesterday's closing of 1,812. So that is the price that we're looking at in terms of Grasim's rights issue. Promoters are going to bring in 1,700 odd crores in this issue. A large part of the chunk of the money will be used to expand and be invested rather in their paint business. We will be talking to, in fact, on our editor's card, that's one stock that will be in focus. Sajid will break it down for us, talk about Grasim in a little more detail, talk about the stock performance. performance and what this really means for the stock and investors of Grasim. Well, another one to watch out for this morning is going to be Dabur. They've said that they have seen they're seeing early signs of revival in consumption. Rural demand, though, continues to lag versus urban demand. They are saying that they expect the food and beverage segment to grow in high single digits. Home and personal care division to grow in mid-single digits is what they've indicated. And they expect operating profit to go slightly ahead of revenues. There's also a report on MK on Dabur where they've maintained a price target of 650. They did say that the weak winter hurts India show. Valuations capture headwinds. So that's the view. And I believe Niraj just gave me that look. You want to comment on Dabur at all?
No, just that point that Citi also came out of the note and said that they maintained the sell, and they say that while there is a pace, there is improvement, but the pace of improvement is very, very gradual for Dabur. No, just that point, just that addition on Citi.
So there are, despite those numbers, and I don't even think, to be fair, Dabur is not sounding excited either. They very clearly said that rural demand is lagging. So brokerage is pretty much mirroring what the management of Dabur has said. So no surprises there. It could be a weak start. Even though they've said there are early signs of revival, we'll have to see which way the market really wants to look at this. In terms of business updates that Tamanna was indicating to, she's got a whole bunch of them, but I'll quickly mention RBL. Remember yesterday they sold their credit card business, and that was the big trigger for RBL. This morning, they've given us an update where their gross advances are up by 20% at 81,870. Deposits are also up 13% year-on-year. Their CASA ratio stands at 33.8 versus 36.6. So watch out for this one. There will be some reaction coming in on that business update. I'll leave it to both of you to take the other stocks, but I have some updates on Sobha and Suntech, which we can, of course, then talk about.
Okay. I just wanted to, make a quick comment on what Dabur has said and the larger indications of that. And this data usually comes, and this commentary usually comes from your FMCG players and your large FMCG players who've tapped into what is happening on ground in terms of rural demand. And this is one thing to watch out for. While day in and day out, we look at all the positives, and they're overwhelmingly large in number of what's happening in the Indian economy. This is one sort of speck on the horizon or cloud on the horizon that we need to keep a watch out for, that the rural economy needs to fire back. We've had a whole year of patchy rainfall. It's impacted crop output, and that will start to catch up at some point. Having said that, it's a day of business updates. And, before we started the show, we were talking about business updates. Then you see the numbers. But business updates is something that the market watches. So Utkarsh Small Finance Bank has come out with its biz updates. Gross loan portfolio is up about 31% year-on-year. All these numbers YOY. Total deposits are up about 17.6%, while their CASA ratio is at 20% versus 21% in Q3 2022. L&T Finance has seen a 31% increase in their loan book. Their retail disbursements are up 25% as well. And their portfolio rationalization is estimated at 91%. So that's interesting. We'll also get Harsh in later in the day to break down more of these and give you a more holistic picture of what these business updates are indicating for the financial space. But I want to bring in IIFL as well into the conversation because of a note by Motilal Oswal. So that might be a stock that you want to keep on your radar. They've initiated a buy coverage. They've initiated coverage with a buy rating and a target price of 800 rupees on Motilal Oswal, on IIFL. They've estimated a PAT CAGR of 28% over FY23 to 26 estimate as well, and the estimate ROE of 4.1%. So the overall expectation is that IIFL will be able to maintain its NIMs at similar levels in FY25, FY26, and that's one big indicator that we need to look at. REC, I suspect ahead of Vibrant Gujarat, you're going to see a lot of news flow around MOUs being announced. And at the end of the day, remember, these are MOUs. The actual, order flows have to be inked. But nevertheless, there have been reactions to this in the last trading session as well. So REC Power Development, perhaps a 2,094 crore MOU with Gujarat government. It's a MOU for implementation of a smart metering project. And this I would perhaps take a little more seriously because across large cities, you're seeing the move to smart meters in a big way. Jupiter and BEML, it came in just before market close yesterday, but significant orders from the Ministry of Defence for both. Jupiter Wagons has received an order of 473 crores. They'll be supplying 697 bogie open military wagons. And BML has secured an order for 56 mechanical minefield marking equipment. It's a 329 crore order. Yes, Niraj, you want to add something?
Yeah, there's only one thing left to add, and which is the electric utility stocks, because CES has published the draft tariff norms for the FY25 to 29 period. And essentially, it's an overhang lifted because the norms leave regulated ROE largely unchanged, maybe a small downtick for newer projects from April 2024, but for all the current projects there is no change. So most brokerages term it as a big overhang lifted, and for NTPC in particular it's a decent one, because CES has increased the incentive for generation above norms for NTPC to 75 paise per kilowatt per hour from 65 paise during peak hours. I think all of this is an increase to encourage additional generation to meet power deficits. Remember, 2024 will be a year of power deficits, as JSW Energy has gone on record multiple times telling us. If this confuses you, the one line that matters from a trade perspective is what Jefferies has said, and their estimate is that NTPC's FY24 to 26 EPS could see a 1 to 3% upside risk, while power grids could see 1 to 2% downside risk. So watch out for this as well. We have to do editor's cut. But Samina, you wanted to do the updates? Quick 30 seconds.
On Soba and Suntec. On Suntec, Pabrai Investments sold 2% stake on the 2nd of Jan. The update has only come in yesterday evening. And also in Soba, Dendana Investment Mauritius has picked up 0.53% stake. And only mentioning this one because the stock was raging in trade over the last couple of days at 1269.57 paisa a share. They've also posted a 37% gain on total sales value. Average realization price per square foot is 11,732. Soba is also in focus because Jefferies has said that they may look at raising the price target on this one, looking at how well it's been for the company and the sector as whole. But yeah, that was pretty much it. I had to talk about real estate.
No, real estate does make a difference, of course. But about time on the trade setup. Let's go across to Alex for the editor's cut. And Alex, a packed house today.
Oh yeah, it's going to be a power-packed session today, Niraj. And in fact, let me break it down very quickly while the editors are walking onto stage. And the most important factor that we're discussing today, of course, is Bajaj Finance. You saw the numbers, 35% assets under management growth in the third quarter. The question that we're asking is, does that mean that the growth concerns are out of the window, and what does it mean for the rest of the year? The second point is the real estate sector that was just being discussed, and the fact that the real estate index yesterday increased by a whopping 6.7%. What's new? Because this is an index that's gained nearly doubled in the last 12 months, and certain factors like sales have already been discussed. Now, the third one that we're discussing is Grasim. And the rights issue pricing, of course, is in. But the question that we're asking is whether or not the market is pricing in or will price in the paints business that is going to be launched imminently. So let's start with the first one, and that has to do with Bajaj Finance. Harsh, the question stands. Are growth concerns out of the way?
Alex, it seems so, is how I would put it, because it's a second consecutive quarter. I know it's a seasonally strong quarter, and Vishy can probably weigh in. It's a seasonally strong quarter, but it's a 35% growth, especially when your guidance for FY24 is 30%, is quite a beat. And it's not like in Q2 they didn't do that. In Q2 as well, they clocked a 33% year-over-year growth, 7% sequential for a second consecutive quarter. So extremely strong. And this is on the back of two key things which have played out. One, certain RBI restrictions on a couple of their products. Second, the risk-weighted assets being tweaked by the RBI, and it's a double whammy for NBFCs because one, on the lending side of things, RWA has been tweaked, and even on the borrowing side of things, RWA has been tweaked. So it's a double whammy. Of course, margins are going to be key. But at the moment, growth does not seem to be a concern per se.
How have they grown? That's the question, right? Because we were talking earlier and you said 45 days is more or less what they would have had to deal with the change in RWAs, which was supposed to make things costlier for them and was supposed to be a little bit of a barrier for lending. Why have they grown 35%?
So one is they've done a very smart capital raise in November.
Sure.
It's an equity raise. In a market where they are probably one of the most well-capitalized NBFCs, they've gone ahead and they've done a equity raise. So that's one thing which has given them the confidence to go out and lend. And second, it just seems that their machine seems to be chugging along. There seems to be some level of confidence that they are still able to lend despite all of this, which is a clear sign. I mean, it's not like an NBFC can grow 7% sequential in 45 days. It would be growing through the month, and maybe Rishi can weigh in on that as well. Yeah. So I don't think that it's something that they've tapered off in the last 1.5 months of the quarter. It seems that they've grown consistently through the quarter, and there seems to be a sense of confidence within the
I think if
setup.
not devil's advocate, a note of caution is what Vishy is here to talk about.
Yeah, so that's right, Alex. So when you look at the numbers, as Harsh put them out, yes, it looks extremely well done and extremely well placed as a lender in the economy. But let's look at some of the commentary that came in Q2. Right, there was a note of caution that Rajiv Jain, the MD and CEO of Bajaj Finance, pointed out with respect to imprudent borrowers and specifically in the rural segment. Of course, there are a few in the urban as well. In Q2, what the company did was reduce their exposure by 8% in the urban areas and about 14% in the rural areas. Now, that doesn't just vanish in one quarter. This is something that is going to last. And if you look at the commentary that Rajiv Jain made, he said that probably around February is when this is expected to turn around. And that we still need to see solid evidence of that improving. One could point to, say, Mahindra Finance, which is a specifically rural lender. And if you would look at their quarterly updates, there as well, they've seen Q3 being a very strong quarter. Of course, Mahindra Finance has its own cyclicalities. So we need to wait and see whether that translates as strongly in the Q4 numbers as well. But as far as Bajaj Finance is concerned, now, yes, there are business restrictions which came in 45 days ago, and to show 35% growth, you need to have grown during that period. My personal thesis is that there is a shift in the portfolio. They are moving towards safer assets because there is a clear risk emanating in the unsecured portfolio, which is very clear by RBI commentary, which is very clear by the FSR notes that they've made. Too many people borrowing too much money, and there needs to be a shift in that. That's what the RBI's caution is. So it's unlikely that a lender of Bajaj Finance's size is unaffected by that.
So possibility that the shift in the texture of the loan book is leading to the growth that we're seeing. We'll get clarity on that in just a bit.
That's right.
The last point on valuations, does it capture that 35% and potential for that kind of run rate?
So, Alex, I'll put it very simply. There's been only 2 times in the last 8 years that Bajaj Finance has traded below 6 times price to book. Currently, it's trading at roughly 6.8 times price to book. The 2 occasions when it was below the 6 times price to book mark was 2016 and 2020. 2020, of course, being that exceptional year. Currently, at 6.8 times current price to book, what market analysts are projecting is an upside of 16% from here. Over the 12-month period.
Okay.
So that's where it is. And mind you, it gets that valuation because of asset quality. Never has the net NPA been above 1% since FY 2010.
Okay. All right. So one to watch, certainly. But the real estate pack, Sajid, 6.7%. It came kind of out of the blue. One would think, at least because the fundamental factors are already factored in, one would think. So what's playing out?
So, if you look at the commentary that we've been hearing in 2023, is that exposure to real estate was mainly through ancillary sectors.
Okay.
Your Century Plies and those kind of companies which are pipes companies and everything. Now, look at the holdings of the institution, mutual funds and FIs. They've been underweight or neutral on real estate for the last whole year when Nifty Realty Index went up by 96%. I was looking at the FI numbers, and these are fortnightly numbers coming out on the NSDL side. The total AUM was around $6.8 billion. It went to $13 billion, and primarily because of asset valuation, not because they have been putting new money. Right. The net new money has been only $350 million in 2023. Wow. So they are grossly underweight, or they don't have it. What's changing for the sector? the sector is seeing a pre-sales growth of nearly 30% compared to 15 to 20% in the previous years. This year, FY24, they expect the total value of those sales to cross 1 lakh crores. So assume that top 10 or 12 companies which are part of the Nifty Realty Index, if I look at these companies, we're looking at sales in the next 3 to 4 years because these have to be executed. These are, accounting norms are there. They have to recognize revenues based on the completion methods. You're looking at the revenue and the profitability flowing in the next 3 to 4 years, and people don't have that kind of, in their portfolio, or they have very limited there. So that's what is driving real estate now. Means institutions are now taking a call saying that, if you are going to bet on the ancillaries, and they have been doing, because they have been doing a lot of capex as well, then it's better also to look at the real estate companies because they're sitting on that kind of pre-sales numbers.
So what you're suggesting is that this is insti buying that is causing all of this?
It could be insti buying, it could be portfolio building of real estate, because from now on, if you have to deliver that 100,000 crores which they have pre-booked in 2023, 24, it has to be done in the next 2 to 3 years because that's a delivery period for them, and that will translate into revenues, EBITDA, and profitability for them. So while the index has jumped, the stocks have jumped. Institutions have been staying away from holding real estate because of various reasons, transparency, accounting issues, everything. But the stocks have run up, and they've been
delivery is also higher, right?
Yeah, delivery is look at yesterday's volumes. They were up nearly 3.5 times the regular 1 month average volume. Delivery has been higher 2.5 times average 1 month delivery volumes. So there is holding or buying into that these companies, at least the 10 companies which are part of the Nifty Realty Index, it's been they've seen good amount of buying happening and delivery happening on those companies.
All right, so delivery-based buying in real estate companies. The last topic of the day has to do with Grasim. And the question essentially that we're asking, it's not just about the rights issue. Of course, the rights issue was something that was talked about. The pricing is new. And of course, this is going into that capex plan. And the paints business is part of that. Is the market factoring that in, that paints business?
So, to set it in context, the rights issue is around 12% discount to the current market price.
Yes.
It's going to be, they're going to raise 4,000 crores over the next 2 years by March 2026. The paint business is going to be launched in February. The backbone is ready for them. The distribution model is ready for them, and they've tested out in at least 8 to 10 cities for the paint business. If I look at the valuation of Grasim, and I'm putting plain numbers out here for everyone to think, 16 to 17 times forward earnings, which is there. It will have an EPS around 127 rupees or so, and that's giving the current market price for them. Even if I assume that the earnings doesn't go and the paint business top line is going to grow and paint business is going to take 2 years to get profitable, and the earnings remains at the same level of 127 to 130. There's going to be a multiple that's going to build up on Grasim because of the paints business. Grasim today is at
in
16,
2 years.
In 2 years, and market is going to
factor that in
now, right? 16 to 17 times forward earnings is now. Look at Asian Paints; it's 60 times.
Right.
So even if I say that Grasim is not going to be an Asian Paints, it still have a re-rating to say 25 times. What is the price going to be? It's a simple calculation, over 3,000 rupees.
Yeah.
So, so I'm sure that investors in Grasim or shareholders of Grasim are looking at it from that point of view. And the market will start factoring in that re-rating or the band shift of the PE, which Grasim has been stagnating for the last couple of years. Because Grasim is now moving into the paints business, which is much more high growth business for them in that sense.
So then that pricing of the rights issue of 12.5% discount starts looking more juicy.
You'll see active trading in the rights which will be available on the stock exchanges.
Okay.
So that's going to happen going forward from here.
All right. On that note, that brings us to the end of this particularly entertaining and informative edition of the Editor's Cut. It's back to everything you need to know before the start of trade. So do stay tuned.
Welcome back. You're watching the India Market Open. Let's take a quick look at the headlines at this hour. Global cues continue to be negative. The Nasdaq falls for the fifth straight day. Bond yields climb ahead of key jobs data, which was out later tonight, India time. Oil prices, meanwhile, have slipped as a huge stockpile of fuel in the US washes away worries of the Red Sea. And Grasim comes out with a 4,000 crore rupee rights issue at a 12% discount to market price. Promoters will be bringing in 1,700 crore rupees. India is on its way to become a developed economy. That's the word coming in from Aditya Birla Group's Kumar Mangala Birla. He adds that the government is making all the right efforts. And Apple is downgraded for the second time on concerns over iPhone sales. So those are some of the top headlines coming in today. But let me go quickly across to Agam, who's standing by with all the action which seems to be happening on the F&O side, Agam.
Yes, and towards the positive end as well. Now, we were expecting some amount of weakness yesterday that didn't come through. And in fact, we saw the benchmarks advance to quite an extent, in fact. And we have seen a little bit of a change in the ranges as well as we speak. But I'm going to start off with the index futures, where we in fact did see some amount of unwinding. Remember that we were expecting correction that didn't come through, which is why we saw a lot of these traders come through with a bout of short covering, even as the index moved up by around 0.7%. When it comes to the Bank Nifty, on the other hand, we saw fresh longs coming through, even as the open interest increased by 2.5%, with the underlying itself moving up by as much as 1% and reclaiming the 48,000 mark. What's happening as far as the option space is concerned? We move into a new week and we work with a new 500-point range, which stays between 21,500 on the low end, where the puts have the maximum open interest, as you can see on your screen here, and on the higher end, it is 22,000. Remember that over the past couple of days, we saw a lot more accumulation around 21,700, 21,800 calls. That has once again shifted higher. Of course, the range will be broader as we move into a new expiry. That said, in terms of change in open interest, as one might expect, we saw a flurry of activity around 21,500, 21,600. That's where we saw a little more change. But let's move on and talk about stocks then. And while it was a mixed market, Alchem Laboratories and India Cement did see longs building up. LTIM, Navin Fluorine and Escorts, on the other hand, saw shorts. And in terms of those stocks which saw unwinding in open interest, well, we did see about a short covering for ONGC, Nalco, GMR in airports, along with Federal Bank. And Lupin, on the other hand, saw a bout of longs unwinding, even though it saw a cut of just about 0.5% as far as indices are concerned. The question is, where do we go from here? What do we do with this data? And how do we trade this? Well, we have Shivangi Sarda of Motilal Oswal Securities joining us on the show. Shivangi, good morning, and thank you so much for joining in. Let's start with your assessment on the benchmarks. How are you viewing them, and how would you trade them?
Very good morning, and thank you for having me on the show. So we've seen that the indices have now come again after a weakness of the last 2 days. There was slight profit booking, but then again, now we've seen that the bulls are back in action, although follow-up is slightly missing. But then the last hour trade yesterday was quite meaningful, which suggests that, the up move is going to continue for the next higher zones, which is near about 22,000 levels. And on the downside, we are seeing 21,500 as a crucial level, which will act as a support to watch out for. Overall, there has been long built up, and index has bounced back from its key retracement level of 38.5%, which is near about 21,500. So this is a good bounce back move, and a halt over here is only going to make room for a good upside move. But then again, volatility index is little on the lower side, so we may expect some range-bound consolidative move moving ahead. Now, talking about the banking index, we've seen that the heavyweight banking stocks are also supporting the index, and we've seen that it is moving in line with the broader market after a slack of the last few series. And it's refreshing to see that yesterday it outperformed the Nifty index. And next on the cards, we are looking at the recent lifetime high of 48,636 levels, and the support which is coming out to be near about 47,750 levels. So both the indices, the view is buy on decline on any small dips, and this halt has only created like a good space for the up move. So yes.
Moving on, Shivangi, you have two trading ideas, but I'm going to start off with Tata Power first. What is your view here, and what are you doing with options in this space?
So Tata Power, we've seen that it has come out of its consolidation in the last 20-odd sessions. And, last time when it tried to surpass, it faced some sort of hurdle at 346 zones. And the kind of long build-up that we've seen now, it is ready to surpass these levels. Good volumes can be seen over here. And what is different here is this time there is a positive divergence in the RSI as well. So this stock is all set to move upwards on the weekly frame. It is coming out of its range. Even we've seen that it has been an outperformer in the entire space. So this stock is going to make a buzz right now. So recommending a buy in the 340 call option with a target near 18 zones and a stop loss of 10.
Shivangi, can you also take us through DLF? I believe you have a view there as well.
The entire real estate pack is in buzz, and we've seen that this stock is holding above its key exponential moving averages. It's recently given its price volume surge in the previous session, and the way it's come out of its consolidation, and there has been highest volumes in the last 1 month. So this is clearly indicating that buying interest is totally focused over here, and there will be good action over here. So recommending a buy here in the 760 call option with a stop loss of 19 and a target of 38.
Shivangi, just a follow-up question. You have suggested buying calls in both Tata Power and DLF. There is a risk that if these stocks do not move and perhaps consolidate over the span of the next 2 to 3 days, there is a likelihood of losing out on time decay. The question then is that why is it that you're not playing spreads, that is something like a debit spread or a credit spread, and why is it that you're just going ahead and buying plain vanilla call options in these cases?
So, of course, one can go for spreads if they want to, of course, hedge their positions. But then I believe that these stocks are quite in momentum. And the high open interest addition over here is indicating that the up move is quite expected, and there will be, less risk over here. And we are also taking in line with the stop loss. So, of course, we could, do the spread as well to reduce the margin. If one is going for only naked option selling. So, of course, spreads can be utilized, but then open interest addition is so much over here that option buying up move can be captured here as well.
Of course, the idea here is that a swift move can significantly see an appreciation in premiums if you are, in fact, buying calls on a naked basis. And if you do see that swift up move, you are likely to see this elliptical convexity come through as far as your position is concerned. Shivangi, on that note, thank you so much for joining us and taking us through your views, as well as giving us a couple of trading ideas. And with that, it's back to you, Samina.
Would Akam care to explain the last sentence that he just did for the benefit of our viewers?
Yes, absolutely.
You mean sharing our views?
I have, in fact, elucidated on this one. But if you just buy a call option, and if the move becomes very swift and the up move comes in just about 1 or 2 days, you're likely to see a considerably higher return on the capital employed as compared to just simply buying futures.
And what happens if the market sees a swift move downward?
Well, then you're clearly going to lose out.
Out of the money.
Yes, you're clearly going to lose out because, well, in that case, it's moving against you. So if you buy a futures or you buy a call option, it's not going to work out in your favor.
But buying a call option would still restrict the losses, right? Because
Absolutely,
you're only restricted to the premium that you're paying.
Yes. And you wouldn't lose to as an extent as you would say if you were to be in a futures. Yes.
But of course, futures can be rolled over.
Well, and the losses could magnify if the market keeps on moving.
As long as you give full margin calls, I think you're okay. But fair point. Depending on your risk profile, if you're slightly more risk averse, you might be better off doing a call option as opposed to a futures trade. Thanks, Agam, for that. It's going to be an interesting day. There's so much news flow that we are tracking this morning. You've got lots of activity in the F&O space. Bank Nifty is one that you're going to watch out for as well, whether or not leadership will continue to come in from Bank Nifty. In terms of stocks to watch from the likes of Grasim, which has announced a rights issue. Jupiter Wagons, it's won a big order. Lupin, that's got a tentative FTA approval. PFC, that's increased its borrowing plan. REC, that's signed an MOU. Vari Renewable, which is considering a stock split. You've also got Nestle that goes ex-split today, and a whole barrage of brokerage calls are coming in. Well, we've also got lots of Q3 updates on the likes of Dabur, Soba, Kalyan, RBL, J&K, Utkarsh Small Finance, and L&T Finance Holding as well. We've got Harsh who's standing by with more on that. Harsh, what is L&T Finance Holdings business update looking like?
Well, yes, I'll cover all the financials, in fact, Samina. So let me start in descending order with regard to advances growth. L&T Finance, very strong growth, 31% year over year is where their AUM has grown at. Now 14,500 odd crore with regard to its disbursements. Now with a loan book of roughly 75,000 crore, which is the retail component. That's a very, very strong set of disbursement numbers which L&T Finance has come out with. Portfolio retailization, they say, continues. 91% of the portfolio is now retail. And they've also done a small fundraise, 500 crore fundraise. NCDs is what they've done with regard to the fundraise private placement. Quickly moving on, Utkarsh Small Finance Bank also growing at roughly 31% in terms of its advances. Gross loan portfolio is now at 16,500 crore. It's a newly listed company, so it's one to keep a track of. And the deposit growth has been well slower in comparison to the advances growth. Around 17.5% is where the deposit growth number has come on year over year. Your CASA ratio has further moderated. 20% is where the CASA ratio is at. Clearly, the LDR seems to be increasing in terms of its percentage across the banking space, and that is something that one needs to keep an eye out on. RBL Bank, Q3 update, 20% growth with regard to advances, 13% with regard to deposits, CASA ratio moderating, same old story. Sub 34% is where the CASA ratio is at now. And again, the LDR seems to be shifting upwards. J&K Bank, in fact, growth has moderated. 14% odd is the growth number which has come in for J&K Bank on the advances side of things. That's below what the market is growing at. So some amount of market share dilution happening on this one. Deposit growth is single digit, 9% year over year. And your CASA ratio is again very strong, but has moderated from that 53 odd percent to 50% odd in this particular quarter. So all of those is something that we'll have on our radar through the day today.
Okay, Harsh, we'll watch out for some of these. Well, you know, some of the smaller ones, the updates seem pretty strong, so we'll watch out for those. In fact, let's get in Vinit Bolinjkar of Ventura Securities on the show in moments from now to try and talk about his thoughts on some of these updates as well. Vinit, good having you. Thanks so much for joining in. You know, so much to ask. Real estate has had a big day yesterday. There are clutch of defense stocks which are in focus today. Draft CRC norms and updates. Let's start with the updates, Vinit, if you don't mind, and talk about what have you noticed, if you have noticed something special within an L&T Finance or an RBL Bank or an Ujjivan or a J&K Bank for that matter.
So it's a very, very interesting space to be in finance. A lot of action happening. In fact, RBL Bank, we expect some kind of corporate action to happen in terms of some serious investor picking stake in the bank. This bank is expected to be in the limelight going ahead, you know, especially this month and the next. In terms of L&T Finance, they've done a shift of portfolio very well. They've sold off old businesses which are not doing well. And the new business of pure lending is really picking up steam. They're going extremely well. And I guess that, you know, this stock is probably headed to around $200. Ujjivan Bank also is on a very, very strong wicket. And we like the bank. We think that it is fairly undervalued. And we expect a lot of action to take place out here.
Vinit, I don't know if you track Utkarsh Small Finance Bank, but the gross loan portfolio growth of 30% and CASA not dipping too much. Do you look at this one at all?
No, we don't look at it. But if you were just the cues that you give me about gross loan portfolio growing without CASA dipping too much means that they've been able to grow their CASA really well. In fact, I'm guessing that they would be, the CASA is very, very low at 21%. So I believe that they would be pushing that very heavily. And because they are underpenetrated in the system, they would be having high attractive interest rates where they can build their CASA book aggressively.
Got it. So, Vinit, from either the updates that have come out thus far or within this small banks or NBFC space, because there is also a Motilal note on IIFL Finance today. They talk about the 20% ROE that the franchisee owns. I'm just trying to understand what is you guys at Ventura like the most within this mid-sized financial space, be it banks, be it NBFCs?
So we like RBL Bank a lot. Okay. We believe that RBL Bank is undervalued, and the kind of interest that we are hearing about in terms of the pedigree of the investors is going to really lead to a re-rating of the stock. We are quite confident that the management which has done a turnaround in this bank is going to really play out well in the coming few years.
Vinit, stay with us. I'm also welcoming Sudeep Shah, Deputy VP, Head Tech and Derivatives Research, SBICAP Securities with us this morning. Sudeep, very good morning to you. Tamanna here. Great to speak with you on NDTV Profit. Let's begin with Nifty and Bank Nifty levels. We saw a positive upside move yesterday. We're testing 21,700 now. Where do you think the resistance exists?
Good morning, Tamanna. See, what we have seen in the markets in the last few days is that post that a big move from 20,980 to 21,800 in just 5-6 sessions in the last week of December. we've seen consolidation happening in the last 3 to 4 sessions. And why consolidation? Because from the highs, we have not even corrected 1% or 1.5% more than that. So, and within this consolidation, we are seeing sector rotation happening. And if we see Nifty, specifically, Nifty has not even breached its 13-day exponential moving average, which is at 21,500. So what I feel is, and if you see the charts since November 3rd, when there was a breakout above the 13-day exponential moving average around 19,250, this EMA has not been breached even once. So till the time this does not get breached which is around 21,500 right now, I feel that positionally markets are headed on the upside, and the first resistance for the day would be 21,730. And once Nifty surpasses this, then there could be a decent move up to 21,900, 21,950 on the upside. And what would support this would be Bank Nifty and financials, which have outperformed yesterday, and even day before yesterday when the markets were falling, Bank Nifty fell less. So we feel that the pocket of outperformance could now come from the banking and financial names.
What are your levels on the Bank Nifty?
Important levels for the Bank Nifty would be around 47,830, 47,800 zone, where the 13-day exponential moving average is present. And last 6-7 days, it has flirted with this level, with this 13-day exponential moving average, but it has never closed below that. So we feel that till the time this 47,800 zone is guarded, steadily a fresh lifetime high in Bank Nifty could be seen, and we could be eyeing levels around 48,600, 48,700 in the next 2 to 3 sessions.
Sudeep, as we're gearing up for trade this morning, GIFT Nifty is indicating to flat start, but there'll be lots of stocks that are in focus. What are your trades for today?
My first trade would be from the banking pack. Now, as I've been mentioning that the Bank Nifty is looking bullish. Yesterday, there was one stock which showed first signs of momentum, and that is Axis Bank. Now, if you see Axis Bank, it was an outperformer in the month of November and till early December. Then it went into a period of consolidation. And once again, this stock is gearing up, and it's sustaining above its 13 as well as 20-day exponential moving average. And also, it is looking good on the weekly and the monthly charts. So I feel Axis Bank is resuming its uptrend, and from the current levels, this could be bought with a stop loss of 1090 and a target of 1165 to 1175 on the upside. My second pick would be Tata Power. Now we have been observing a lot of positive momentum towards this power stocks. The CPSE power names have already blasted, and they're on an uptrend. But if you see Tata Power, right from November 30th, from where it had broken out around 260 levels, it went to around 330, 340 levels. Then it slid into a period of consolidation for a period of at least 15 to 16 sessions. Now we are observing a breakout with volumes on the upside. The bigger time frame charts, monthly as well as weekly charts are already positive, and again on the daily chart, the uptrend is resuming. So I feel from the current levels, Tata Power can be bought with a stop loss of 328. And on the upside, we could see levels of 358 to 365.
Right. We've got talking about stocks that will be in focus today. We've also got Anushri standing by with stocks to watch. Anushri, extensive list, I believe, this morning.
Right, quite an extensive list. So I'll present to you 4 stocks, starting off with Jupiter Wagons and BEML Limited. This is after Ministry of Defence have signed a contract worth rupees 802 crores with both of these companies, which includes Jupiter Wagons securing orders worth rupees 473 crores to manufacture about 697 of bogie open military wagons for the army units, while BEML has secured about 329 crore of order win. Now coming to Kalyan Jeweler, it has come out with its Q3 FY24 business update, wherein it has recorded about 33% growth in its revenues and added about 22 net new Kalyan stores in India. Going forward, it also plans to add another 15 new Kalyan stores for the 4th quarter. Now, two realty stocks, starting off with Macrotech, which has come out with its Q3 numbers, wherein it has recorded about 12% growth in its pre-sales at rupees 3,410 crore compared to about 3,040 crore in the last year. while the collections have gone down by about 3% at rupees 3,590 crores. Lastly, we have Sobha Limited, which has come out with quite a strong update over here with about 37% growth in its pre-sales at rupees 1,951 crore, while the average price realization has also gone up by 15% at rupees 11,732 square per feet. The company also added that they have launched 2 new projects in the quarter. So that is all for the stocks that you should be watching out for today.
There is a whole bunch, a barrage of stocks that we will be tracking in today's trade. Vinit, we have a few minutes before we have to quickly slip into break. But real estate, anything there that you like? Sobha, Suntech, DLF, couple of brokerage upgrades, or they're on the radar for an upgrade. Numbers are looking good as well in terms of updates. Are you buying any realty names?
I think Sobha looks fantastic. We also like Godrej Properties. And DLF is one of our top picks for the Delhi market. So these 3 stocks, I think, we would like to stick with the large cap names, better known names, and we believe that they have a long way to go.
We'll talk to Sudeep about the real estate names, if not already on the other side of this very quick break. Back with the pre-open. Stay tuned. All right, back with India Market Open right here on NDTV Profit. The pre-open or the implied open might be suggesting a positive start. Well, it ideally should, but okay, a flattish to a marginally off kind of a start, because Asia wasn't doing that bad, you have to say. Or the US markets also had an iffy evening, but nothing too dramatic is the limited point. But the sector of yesterday was real estate. Can't not talk about it. Now, Vinit has given his ideas with DLF being the NCR market play, and he likes Sobha. Sudeep, yesterday was a manic day for real estate stocks. From all the ones that have moved up thus far, mixed technicals, mixed derivatives, tell us 1 or 2 names which might still have some juice left from a trade perspective.
If you see, real estate index itself has given a big breakout on the upside, 7% up yesterday, and at a fresh lifetime record high. So I feel the momentum is strongly on the upside with this sector. And one stock which straight away comes to my mind is Oberoi Realty. Now, if you see Oberoi Realty, a lot of decent open interest was built on the long side. And the stock with yesterday's move has not only broken out of its previous 4-5 sessions consolidation, but it has even broken above its previous swing high, which was of 1,500 on 15th December. So that entire trajectory has been taken out, and we are in a new orbit in terms of this stock. And yesterday's volumes were double than the 50-day average volumes. So that speaks about the momentum, the force that the sector is having. And I feel from the current levels also, Oberoi Realty can move to around 1630, 1650 on the upside given the current momentum, and the stop loss for the same could be around 1490. The second stock that looks good is DLF. Now DLF, the kind of volatility that the stock was having earlier, now we've seen that the stock is now in a steady uptrend since last 4 or 5 months now. And it has even, this stock has broken out of its previous swing high around 730, 740 and by a decent margin. So from the current levels, I feel the momentum could still continue, and till 730 is held, this momentum on the upside could continue around 800, 820 levels.
Okay. Pre-open rates, and of course we'll wait for them to settle. At the end of the 8th minute is when we'll get an idea of what the Nifty is doing. But guys, isn't this the beauty of a cycle, like the real estate cycle? Lasts for so many years. We've gotten one after so many years. After, I think 2014, 2021, a flat line for the real estate space per se.
Yeah.
The cycle is turned. And for us, so many companies, like Sudeep was talking Oberoi. For people who are aware of Mumbai, and our viewers are spread across the country, but between Borivali, Thane, and the upcoming launch at Worli, they've got these 3 large, humongous, mixed-use developments coming up. And I remember a note sometime last year that ignore me, pardon me, I don't remember the brokerage, but they had said for Oberoi from 2025 onwards or FY25 onwards, the quantum of the REIT or the commercial portfolio, which is the annual yield portfolio, jumps some 4x from what it has been, what it was in FY23. So imagine the annual uptick plus the quantum of residential developments that they are getting into with the brand name that they have. Very interesting.
So just a couple of things I wanted to add, if I may. So while I'm speaking to people in the industry, and I have been for a while actually tracking this space and how it's doing fundamentally since the pandemic and before. So obviously RERA, etc. has been a game changer, has changed faith of people. But remember, when you mentioned earlier as well, Niraj, that inventory levels are at their lowest. That's also because in the post-pandemic era, new constructions had slowed down. Yeah. So that demand has come down. That is going to build up as now new constructions increase. And another big change that we're going to see is that the technology the industry is using now, or what they have at their disposal, means your new units are going to be ready faster than they have
very likely
been before. So what you see as a very long cycle in real estate on ground might become shorter over time to come in terms of inventory levels rising and demand keeping up. Yeah. So that's just one point. Fundamentally, things are changing in this sector.
But yeah, the new launch is certainly lower simply because there was so much of inventory. Now that it is khali, it'll be really interesting to see.
The new launches have bumped up massively.
Will bump up, yeah, most certainly.
I think another area, another angle to playing real estate. So one, of course, is through ancillary, like you mentioned this morning. You can pick up real estate stocks. I'd also want to know what happens to the REITs. Because not everyone can own a piece of the pie, let's be honest, right? We all want to own a little bit of real estate, participate in the India real estate story. But fact remains, there are only that many ways one can do it. And Vinit, actually, that brings me to my next question. Embassy REIT, Mindspace, Brookfield, none of these guys have performed in terms of the price of the REIT. There has been the dividend payout, which is your yield of 7.5%, 8%. They're looking at much higher levels as well. I don't want to talk to you about REIT as an investment, but what do you do with these REITs? Could that also be one way to play the real estate back, considering these haven't moved since their listing price in the last 5 years?
No, I think that they are a very interesting play, given the fact that if you want to have a non-equity kind of investment, where you have a little bit of upside with reasonable return, which is much above the bank yields, I think they play a very good part in your portfolio. But apart from the REITs, I think the InvITs also play a very interesting role. And out here, I think the InvIT promoted by IRB is very, very good. We're giving a very good yield, and we're seeing their tariffs rise. And so I'm a big proponent of that.
This is also what he's recommending. Very fair point. These are two areas you've got to view them as very dividend-paying, high-quality stocks. That's probably the best way to explain what a REIT does. Of course, the function of that in your portfolio is different. They pay a huge dividend. They pay it quarterly. At least that's what we've understood from the likes of an Embassy and a Mindspace. Embassy's focus is the South market. Remember, they are headquartered out of Bangalore, so they control pretty much that market. Mindspace, on the other hand, is largely focused between Bombay and Pune. So those are the few geographical distinctions that we have. That's pretty much what I have on those stocks. But, Vinit, we've been seeing some sector rotation. While real estate is looking like things are turning the corner, fundamentally they're seeing an improvement. Yields are getting better as well. Inventory is dropping. Some part of this is also sector rotation. Now, one sector that hasn't participated in the last leg of the 2023 rally has also been specialty chemicals. None of those stocks have done too well. It's all been largely scattered. Their concerns have been overrated as well. How would you approach specialty chemicals? If you're building a tactical portfolio for the next 3 to 6 months, would you add fresh positions to specialty chemicals? And if yes, which ones would those be?
So we have a very interesting play that we have picked up recently and initiated coverage on, and that is Sarda Nitro. This is a veritable small cap name, but having a very niche portfolio of chemicals, which it probably is the only one who manufactures among very few globally. And we believe that the worst for the company is over, and we are seeing a very healthy trajectory of growth coming here. Last year, they did about 140 crores of revenue. This year, I think after stabilizing of their portfolio with, ensuring that their backward integration intact, should see them do about 220 crores. And over the next 2 years, we are seeing doubling of revenue happen because they're expanding capacity in paracetamol. They're building paracetamol from nitrobenzene, which is one of the second companies in the world doing that. Further, they have planned,
I think,
tons. And along with this, their OBV2 and their other products are doing really well. So we think that this is a very underpriced stock. Optically, it looks quite expensive, but very, very interesting play.
Vinit, just one quick follow-up. Their plans have been in the making for a while now, and it's flattered to deceive a number of times. And as you said, it's expensive. So what gives you the confidence that this will now finally be able to execute in difficult chemistries?
So, they had actually logistics problems. The logistic problem was that their market is in the Europe, and they were outsourcing their raw material from Europe. So they ran up inventories, they built it up, their inventory, their working capital days went up to 400 days. And, their market also slowed down. So they've diversified to bring a lot of domestic play into their portfolio. Their international exposure has come down. And with the global picking up, I think we are going to see a very good play. So their first half has been very, very
patchy line on Vinit today. We'll try and get that back in a second. Just a couple of more stocks I want to cover before open, and we have about 7 odd minutes left. NTPC is definitely one. Already showing some sharp moves in pre-open, and the news there is that the regulator, that's the CERC, has come out with its proposed tariff plan from FY25 till FY29. Essentially, very simply put, they have kept the ROE, that's the return on equity on thermal power, the same. There was a concern that this would be reduced because that would effectively reduce electricity tariffs, but it's the same. That could be positive NTPC, and you're seeing that reaction. We'll get Vinit and Sudeep in on that. And then there's an interesting UBS note on HAL and CG Power as well that we should address. Let me go to Sudeep in the interim till we get Vinit back. NTPC, any views, Sudeep? And on the power sector, we've been seeing some very smart moves in this space. Torrent Power yesterday was also on fire.
Yeah, so while we are seeing a good surge in the power space, and that is why in my opening picks where I shared Tata Power, so the entire sector is looking, it is in a sweet spot right now. And if you see NTPC, Torrent Power, Tata Power, NHPC, all the stocks are buzzing. And I feel even technically, if you see a stock like NTPC, which was consolidating now since 21st of December between 300 and 315, has finally broken out yesterday. And that could be ahead of the news that has come out yesterday regarding the pricing. But the trend is firmly on the upside. It is not even breaking its 13-day exponential moving average. And till the time, I feel overall, till the time 307, 306 levels on this stock is held positionally in the next 10 to 15 sessions, I guess the stock could head away till 350, 355 on the upside, given the strong set of buying force that we are witnessing in this stock. So overall, 305, 300 zone would act as a key support, and on the upside, NTPC could inch up to higher levels to 350, 360 levels also positionally.
Quick view, Vinit. I believe we have your line back, and if you can hear us, quick view on NTPC.
Very, very strong moves coming in. We believe that the growth story is absolutely intact. Multiple drivers of revenue in the form of green energy as well as fossil fuels. And with the way the demand is picking up, I think tariffs are expected to remain strong. And they've got very good backward integration into coal mines also. So we believe that NTPC, being the largest player in the country, it has also signed a number of contracts for hydrogen export to European nations. And you can see how important it is going to become as a player of energy, both green as well as coal, going ahead in the coming years.
Should we quickly update the figures on your screen? Business update for HDFC Bank. That's the big one everyone's been waiting for. So gross advances are up 5% sequentially. I think I saw a line before that the deposits are up about 2% sequentially as well. So that's going to be a big one to watch out for. Yeah, deposits were up 2% sequentially as well. And we'll wait for more details and get a deeper picture of HDFC Bank. But Vinit, quick view.
So, Tamanna, just one thing. So if the 2% sequential growth notwithstanding, this would probably be much higher YOY growth, something that's been lagging in HDFC Bank for a number of quarters. They've not been able to break above that 20% mark. I think this number would probably be 24-25% circa on a YOY basis, which is actually really, really interesting from a stock perspective.
All right. Well, I mean, yeah, sequentially doesn't look too good, but your point is taken that YOY is possibly a better picture, and we are waiting for those lines to come in as we speak. Let me see if we have something.
Deposits are up 27%, so that's what we have. If you net that off, 27.7%
okay,
YOY.
That's a good figure. That's a good number. That's a good number. Any initial thoughts, Vinit, as we're waiting for those numbers to filter in?
So, after the merger with HDFC Limited, they were lagging in terms of deposits, and that deposit gang up is happening very, very smartly. And, I believe that Q4 is going to be the number that is more to watch out for, when we expect the bank to return to a trajectory of about 17-18% loan growth, and with, the deposit growth keeping pace. So we will see HDFC Bank going back to its metrics of the past, and we will see a valuation upgrade happening there. So very good time to get into HDFC Bank. In a fast moving market, people would tend to ignore it, but I think it's a very safe investment with a very, very strong growth trajectory, and this could play out in the next couple of quarters where the stock could be upwards of 2,000 bucks.
And this is the thing. I think they, on a number of while the asset quality for HDFC Bank in the recently released mid-quarter update had some dodginess, or at least they said that there are some chinks there because of the merger. They are spreading their branch network at a breakneck pace, and I think that's the point that probably Vinit Bolinjkar was trying to make. It'll be very interesting to see what happens to the pace of deposits and thereby consequently growth. And can banks like HDFC Bank make the pivot towards capex as opposed to just retail lending? I think that will be a key thing to monitor as well. Wonder if you have a quick, we have less than a minute left. Sudeep, any thoughts on HDFC Bank on the charts?
Niraj, if you see HDFC Bank, it has been an outperformer right through November and December, and in the last few days, it is just trying to consolidate. So I feel overall, till the time this zone of 1660 is guarded, I feel the stock could consolidate here and steadily inch up higher up to 1730, 1740 levels, where the previous highs in the month of July were registered. So overall, 1660 will act as a key trigger level as per me, and I feel till 1660 is guarded, we could steadily see an up move in this stock.
Okay, we will watch out for all of these. Mind you, I think the story this morning is quarterly 3 updates. HDFC Bank is one, but Sobha, Macrotech, both of them have come out with some very strong numbers. In fact, for Macrotech, it's the best ever quarter. For Sobha, it's the highest ever quarter. So watch out for those. Watch out for, as Samina said, Kalyan Jewellers. They have come out with good numbers. J&K Bank, not a bad update. L&T Finance seemed to be a decent update too. And I think all of those stocks will be marked on open. It will be very interesting to see what happens there. Silently, by the way, Adani Enterprises is northwards of 3,000. And Adani Green is at 1,700, so watch out for those as well. But here come the first rates on this Friday morning. It's turning out to be not that bad a week, and for the Nifty, about 0.25%. Yes, pre-open was deceptive, 0.25% higher. The Sensex about 1/3%, or just about there. Banks participating. Today, Jefferies has upgraded IT. I wonder if Nifty IT has some gains there. Should pull up Nifty IT as well. About 1/3%. Not bad. It seems to be a broad-based move. Maybe autos have a chink, but otherwise seems to be a broad-based move. Mid-caps and small caps should come up on your screen. Yesterday was a field day for the mid-caps and small caps. Over 1% gains for both of those indices, and they're starting off well yet again. Bring up the heat map and quickly show you what's moving there. On no surprise, NTPC, remember Jeffrey said it's about a 1 to 3% uptick on their EPS. That stock is up about 1.7. Bharti Airtel, about 1.25%. LTI, again, an upgrade from Jefferies, included Infosys and LTI. LTI is up about 0.75%. Adani Ports, 0.5%. But otherwise, nothing noteworthy on the gaining side, but for the fact that the breadth is positive. What's losing out? Not too much. So effectively, from the large cap end, Tamanna, it's only NTPC, maybe to an extent Bharti Airtel. But I guess, and HDFC Bank, by the way, 0.5% in the green, but not too much there. The mid caps probably have a much larger reaction.
Let's also take a look at the broader markets. I don't know if you pull that up and how broader markets are performing this morning on open. At least for the first few days of this year, broader markets have outperformed. And yes, I would say that trend continues, about 0.5% up in open on the Nifty mid cap 150. We can look at the small cap index as well very quickly and see what's happening there. Decent, all up in the green. Okay, stocks that are on our radar, and I want to talk about HAL and CG Power. UBS has a report out. It's a good report out. We didn't get a chance to talk about it in detail in the pre-open, but let's take a look at how it's performing and look at HAL, up about 3.5-4%. We'd like to get that screen up here as well, if possible, please. HAL up about 3.5-4%. CG Power up about 3% as well. And you know, the UBS report, and we'll cover it in more detail ahead on the show, is very interesting because it's talking about how HAL is going to be the big beneficiary of policy move to make defense equipment in India. India right now has an aging fleet of jets, and HAL comes in here. So that's a long-term view over there, and 3,600 is the target price which was set by UBS. Macrotech, we've been talking about real estate. Updates in Macrotech and Sobha, all up in morning trade as well, one presumes, but their updates have been looking good. And essentially, these are your business updates coming in. We'll have to wait for the quarterly numbers, which finally do, but Macrotech has seen 3 projects added in this quarter. Sobha has seen total sales value at 1,952 crores versus 1,425. Price realization is up as well, but Sobha is down this morning. Remember, Sobha had seen massive run up, so maybe some profit booking coming in there. Kalyan Jewellers is another one that we should point out, and it has seen India operations revenue growth of 40% year on year. Good Q3 numbers there, and 4% up on the stock. Just Dabur, another one I'll put on my list. Again, updates as well as 2 key reports coming in. So weak rural demand is what Dabur has predicted and said. Citi has maintained a sell rating with a target price of 510 on Dabur. But you're not seeing that much weakness. In an otherwise buoyant market, perhaps Dabur is also seeing some kind of bloom there. Samina, what's on your radar this morning?
I think that I've covered most of the big movers. I'll just quickly highlight a few that I'm picking up on. So Torrent Power continues to do well in today's day of trade. The The stock is seeing some buying emerging for the third straight day. Not a big rally, but still up about 2% on Torrent Power. We talked about our ancillary to the real estate pack could be in focus. We saw all those real estate names rage in yesterday's day of trade. Today belongs to the day of pipes. So if you look at Kajaria, Ceramics, Prince Pipes, these are ancillary play to the real estate pack that are actually doing quite well in today's trade. Kajaria is up 2%, Prince Pipe is also up 2%. APL Apollo is back up in today's day of trading. Non-lending financial institutions are also seeing some buying. So the likes of a Motilal are gaining in trade. Yesterday we saw numbers from Angel One where the client base has gone up nearly 60% year on year on back of wealth advisory. Today you're seeing that same sort of sentiment spreading across most of those financial players. Apart from that, fertilizers are seeing profit taking after running up pretty sharply for most part of this week. RCF, FACT, GSFC are all trading with small cuts. Shree Cement, I'm going to quickly point that out one for you as well, is seeing some pressure. IT is firming up a tax penalty on Shree Cement, on back of which the counter is down over 1% or. So largely speaking, no runaway gains. So there's no 4-5% rally that we are picking up on any of those counters this morning. Neither are we seeing very big cuts. What is heartening to see, it's a stable market. We've opened up with a marginal gap up. We're comfortably above levels of 21,700. I want to quickly pull up Bank Nifty because remember we are expecting some leadership from Bank Nifty. HDFC, if I can pull that one up, the business update was more or less in line with street expectations. Remember the bank has been struggling recently in terms of stock performance. This morning marginally high, so no big reaction coming in on that one. The hope is that HDFC Bank will provide the leadership that Bank Nifty currently is seeking. It's been subdued in trade yesterday. This morning as well, not doing too much. But Bank Nifty will be watching out for that very, very closely over the next few days of trade as well. Well, we're calling it 48,000 comfortably taken out. Remember, so 40,330 is what we have on Bank Nifty. Sudeep, there is some profit taking that's emerging across some of those real estate names that we talked about. And Soba was one of your top picks this morning. With the 3.5% cut right now, good time to build a fresh position, or would you expect a little more pressure and then go out and buy Soba in the day?
See, my top pick today was Oberoi Realty and DLF. But if you see the stock, specifically if you see Shoba, see, post that big move yesterday, it was more than 13-14% move yesterday, and it's just a minor profit taking from higher levels if you see in Shoba. So even from the lows of 1235, we've seen Shoba recovering to 1260 odd levels. So overall, I feel 1220, 1230 zone could act as a strong support for the day. We need to watch out how in the next 20-30 minutes this stock trades. But I feel overall 1220, 1225 zone will act as a support until this holds. We could see the continuation of the positive momentum that has been witnessed yesterday.
The NHPC is turning out to be one of your top gainers this morning, and I believe it's gaining on back of some news that came in a few days ago where they are looking to sign a 4,000 crore deal with GPCL for the Gujarat project. So this is all about that vibrant Gujarat that is become quite a talking point. If an investor had to have a tactical strategy around vibrant Gujarat, would you add any stocks in a portfolio? Vinit, this is for you. So fundamentally, what counters would you build in your portfolio to play this vibrant Gujarat theme?
So I think Adani Green and Adani Transmission are very, very strong plays, in my opinion. There is one stock which is, I forget the name. I'll come back to you with if I remember the name. But it's a very interesting play, very small cap. Advait is the name of the company. It's a very, very small play in the hydrogen electrolyzer space that catches my fancy. And obviously, Torrent Power and Gujarat Power Corporation Limited are also good plays, considering the kind of deals that have taken place out there.
Okay, IIFL Finance, by the way, is up 2.5% on that Motilal Oswal note. Remember, this is significant because the stock was up 4.5% yesterday. If you pull up this week's chart for IIFL Finance, you will see it. The interesting piece is what Motilal says in their note about this being a entity with a 20% ROE, I'd miss that. There are not too many businesses in the financial space which can boast of a 20% ROE, 20% plus ROE, and their target is 800, but the target notwithstanding, just the fact that IIFL Finance has been able to do the business in the way that it has and the growth that is coming in seems pretty significant. Vinit, I don't know if you individually look at IIFL Finance. We asked you about your top ideas within that financial space, but this week has had a good run. Do you track it?
So, if you look at all the business verticals that the company has been in, be the real estate piece, be the gold market, the personal loan market, or even their wealth space, the kind of product offering that the company has to offer is absolutely fantastic. And the way that they've built these franchises is demonstrated by the ROE that they have built. It's the quality of the earnings, which is generally being reflected by the ROE. And we believe that IIFL Finance can emerge as a very, very strong powerhouse going ahead.
Because while Motilal has upgraded the target on IIFL Finance, Motilal itself is actually having a pretty good day. Niraj, while I know it's about IIFL this morning and Motilal's known, but I think the space is taking a cue from the numbers we saw from Angel One yesterday. So wealth is the piece they are playing, and if Angel One reported client base or client families up by 70% year on year, you will see a similar sort of sentiment playing out for an IIFL, a Motilal, a JM.
Yeah, Motilal, JM and 360. IIFL Finance is now only lending because they separated the wealth piece on 360. But IIFL Finance individually, but you are right. Angel One, JM, Anand Rathi, all of those.
On that piece, So it's an exciting space. Sudeep, you want to come in on NHPC? We took a call from Vinit on the Vibrant Gujarat theme. But NHPC in particular, stock is up on healthy volumes. It's off the day's high point, but still up 5.5%. Any trade on NHPC?
See, the entire power sector is buzzing now. The morning call on Tata Power is also up 2.5%. We are seeing NHPC, NTPC. All these stocks are right now moving and they're outperforming. So even if the stock is down a bit from the day's high, I feel the overall trajectory is positive. And the stock has been consolidating in the last 1 month between around 64, 63 and 67 levels. And this breakout has just happened a couple of days back. So I feel that this breakout has further legs from here. And on dips to around 70, 71 zone, there could be a good re-entry point. And the levels of 66 will now act as strong support. So till the time the zone of 66 is guarded, this stock on the upside positionally could head up to 80, 83 levels in the next few sessions.
We want to talk about two stocks which were on our radar this morning, Jupiter and BEML. Vinit, I'll come to you first. Both MOD orders, and that's the reason that you're seeing a surge there. Put that along with HAL and that big picture of the defense theme that you look at, already a big push in most of 2023, or at least the second half, and that seems to be continuing. Anything that you like here? Are you finding valuation still attractive?
So Jupiter Wagons is a very, very good pick because, it plays on the buses, the railways and the defense theme. So I think Jupiter Wagons is one of the stocks that I closely track. We like that story. Apart from this, I think HAL, in my opinion, is a tad expensive. Those orders which are there are, they are long-term in nature. And right now, with the bullishness, the stocks are going up. But I believe that there would be a little bit of, being a richness in the valuation out here. BML is an interesting stock, again, because, there is a lot of room for restructuring, which can pull value out of the business. Just for example, its employee count is very, very high. And they've guided for the fact that employee count is not going to grow as much as the volume growth is going to happen. So these themes are tracking the growth story very well. But, the order build-up expectations are also high. So we believe that BML and HAL can be are richly valued stocks, while Jupiter offers a lot of value for them.
Expectations are high is a good point. We're going to have to take a very quick break. We're going to have to thank Vinit and Sudeep for joining us today on the show. And, it's looking like a good start. Nifty Realty again having a good day. Pharma is the top lagging sectoral index. Torrent Pharma, Sun Pharma, key. in that pack as well. And of course, markets coverage continues. But before we get into a break, here's what the management of JBM Auto had to say on the company meeting FY24 revenue guidance and margin outlook for FY25. Listen in.
We are well geared up to cross the 5,000 crore mark. And this year, we are looking to see that more than 30% of the total top line of JM Auto would be EV. And definitely the businesses in the company, we have 3 business divisions, all are growing rapidly. So whether it is the EV business, tooling business, or the component and systems business, I think all are doing pretty well. The market has been pretty buoyant and growth-oriented. And we have been having a good order book, and with about 5,000 electric buses, which we are delivering this year and next year, we are well poised for moving in the right direction.
Right, and as EVs come with better margin as well. So just quickly shifting focus towards profitability. A third of your revenue, roughly 1,700 crore, coming from EV in this year. Where does it go in FY25 and FY26, if we can try and understand? And how much better does your margin get because of this shift in mix?
So I think exact numbers would get crystallized in the next couple of months. So, but definitely we'll be surpassing 12% in the next financial year. And we would be looking at EVs taking more than 35% of top line, or even between 35 to 40% in next financial year, FY25.
And catch this entire conversation with Nishant Arya at 11 a.m. today. But more importantly, coming up on the other side in a few minutes, InCred Asset Management's Mrinal Singh joins us on the Talking Point.